this reference point here, this kind of another accumulation zone, I felt was kind of really important again. So you kind of had two really key references, one which was now made intraday, and then you had one from the previous day, the 53s. And I just kind of want to compare the two bits of price action, in here, and then kind of once we break. I'm not going to bother you guys too much with how I was trading in here, because this was kind of more of a position I held for a long period of time. But it's more once the market broke below these 06s, the kind of a way I like to think of how you're going to manage your risk, and what your kind of two options are, I think, in here, and what you expect to see when we do break those 53s. So let me just bring up my ladders. And basically when I was coming home, this is the low 53s we've broken, so we're looking for, it was around 3:15. Right, yeah, so we just go down. So that low is at those sixes. So yeah, basically I'm going to show you snippets of this kind of area here as we traded into the 06 low before the double O's, and kind of just like my thinking and what I was trying to gauge from the price action this time. Basically I was kind of thinking of it as when I was over my debrief, I was thinking it's very similar to like how I've spoken about before, like in the momentum of like the S&P and stuff like that, when the book kind of just like, it goes very still and very slow. Like even though the idea is clear and it's like really obvious what the market's trying to do, when everything just kind of just like when it freezes and the speed of the auction really slows down, this is when I kind of like, I mean, yeah, you have your kind of, you can never assume the market's going to bounce however many ticks, or when the market's proving your idea right, you have to stay with it in that kind of sense, and you stick to your stop and all those different things. But when you're trying to manage in that kind of small little zone, and what you expect to see around here, when the market starts to really slow down, and like I say, it kind of just goes still. The book's very still, bids and offers are very still. The actual like pace of transaction is just generally slow. Into such a big level at 53s, I start to, it kind of puts me off necessarily maybe attacking lower. When I know, for example, like the 53s, I felt was a very precise point for me to attack. So I was kind of use this information here, and then what it was like below 53s if it was going to break, if we did break lower. And as you can kind of see, we're just kind of really churning out. We're not really like, the auction's very slow. The counter bids off the low are really big. Like they're not, the market isn't able to kind of hold an offer and like not have a very big bounce against it. So all these little things kind of thing, the whole general atmosphere, and you can kind of just see it on the volume profile here. Like for oils be auctioning this much volume at the low, especially when you're kind of expecting momentum, expecting kind of a clean break, it's not really like promoting that type of environment. If I just briefly, so this is kind of another example here. So when we actually make the 06 low, I think it's really quite a good reference as to like how it's kind of gauge how it's trading. Like it just wasn't showing you that initial kind of signs of like free flowing trade. It's kind of really nasty, aggressive bounce off the low. And I believe there's a really good bit of price action here. If you can go back and watch this area again, the amount of size which is actually taken at this low, kind of like once it makes this low and then it bounces, and like I end up scratching this position. But the kind of principle of what I was trying to say in this little bit here is like when it made this low and it kind of really churned itself out, it kind of gave you like a new area to play through, and it kind of gave you a new area to like, okay, right, this is kind of now my new area of focus on the day, and then how I can kind of manage it around the bigger level, which was the double O's. So, and as you can kind of see, this kind of processing goes on for around another 10 or so minutes. I end up scratching the position, so I take a scratch, and then I'm going to, okay, so this is on the break here. So the kind of principle here as we were offering into, so this is as we're revisiting that low, and basically the whole thought for me, how I was managing it, I was like, the way I was kind of planning to trade it was, okay, you had the kind of between 06s and double O's was your kind of area of risk, and basically, you could kind of, you could have started executing before the 06s for sure, you could have executed through the 06s, or you could have taken the trade through double O's. So the kind of way I thought it was, I have a lot of conviction now knowing that if we break the 06s and break the other blows, that this should like follow through, and basically if it breaks double O's, you have a somewhat tight stop above the 06s. Like the market shouldn't revisit here, it shouldn't get back above here, and what I want to focus on is just kind of how the pace of the auction isn't necessarily like a lot quicker until we start to really break lower. But what it is like consistently like quick. It doesn't ever really stall. It does go into like a small range for like a minute or so, 2 minutes or so. But what it does, it kind of keeps up that high pace auction. And even here, for example, when the bouncing, when you get these nasty rips, initially the actual pace of the auction you can kind of see it's just so much quicker. And when the market does start to reload and actually eventually does start to hold these kind of small counter auctions off the low, this is kind of what I like to see in terms of like more consistent flow, more consistent energy, and what you wanted to see initially in the first time. And then once you see these things, then it's just about trying to just really, you have to trust the flow and trust the energy and kind of, you know what the original positioning was and kind of how the market shouldn't get back above those sixes now. Really shouldn't get back. You have this kind of now little area of low volume, which is what you would like to see on a break of this kind of accumulation, which is what we weren't getting before. As you kind of see, you had this really big bulging volume profile here, whereas now you kind of actually have a bit of a kind of a distribution between the two breakouts, which I think is really good. And then it was all a matter about trying to stop now. Stop should initially be above those sixes, above this kind of bit of volume, potentially if you want a tight stop. And yeah, this is a whole variety of things were kind of playing out in your favour here. You had the Brent breaking down, which we weren't having beforehand. The general pace of the auction now is just generally quicker, and it's like consistently quicker. Okay, this is the kind of period of time here where we're having that like small pause in a small range. But what I'm kind of more convicted on is like once we do start breaking lower, as you see, the pace of the auction never really slows down. It kind of continues to get like faster and faster. So you have all these different variety of things now. Now we're holding below double O's. We have like the actual size of these kind of counter auctions have completely gone now. We're basically glued to the low. And yeah, like I said, the volume which is always there, which is below double O's and O6s, which basically just wanted to see if you kind of split how you were trying to view the market. It was like, hey, above O6s and then below double O's and below the O6s. This is what you were kind of paying attention to, and this is what you wanted to kind of, if you'd taken a few losers in there prior to this break, it was all about kind of managing risk beforehand, and then understanding okay, how much risk are you willing to take on between an area which you feel like okay, right, I'm definitely going to get a reaction, and not quite sure as to whether it's going to play through into that area. So once you had the O6s, it's obviously easy in hindsight. Once you had the O6s, which kind of showed you had like a new area to play through, that was in your kind of moment to then say, right, okay, now I can really, I can definitely play into this level from here because I feel, we have enough information now to like kind of have that conviction. Whereas prior to that, okay, maybe you've taken 2 or 3 times, you've kind of been chopped up a little bit, or you've held a position for a long time, and it just won't go. And then, the kind of principle is that, okay, right, so now you've got a new reference. Okay, so what if you scratch it? So what if you take a small loser, whatever it may be? You can kind of then have new conviction, new understanding now that, okay, the market should really break lower through here. That was kind of my principle, my thinking behind it. It just kind of reminded me a lot, like I said, like trying to play momentum in the S&P when it kind of just, everything kind of just stalls, and it's, the whip backs are a lot more aggressive than you'd expect, and it's not, basically it's just telling you it's not what it's trying to do right now, and it's then about using that kind of information before, which is just giving you then to kind of play into the next bigger trade, which is all this kind of was really like. If I bring up my charts again, like at the end of the day, you were kind of just playing for this break with this, the 53s here, which I felt was really important, which would play into the 86s. And once you kind of had this, it's obviously easy. It's like looks a lot easier on this big hourly red candle, but playing through here. When we kind of traded out this small area, once we had this kind of new reference point for to play through, then you kind of had this is where you could have then started to really leverage and kind of had conviction and tight risk management for sure. But between for example 11s and double O's, or when we first were initially breaking down, and when we were then starting to balance, and that was kind of your cue to say when the price action was behaving as it was, okay, right. Then we can kind of then start to play much more aggressively when it does start breaking down. So that was kind of my takeaways from yesterday in the oil. When it does start to move, it can move really aggressively, but when it's kind of whipping around and it's giving you a hard time, then it's generally a sign as to it's not going to give you the break instantly. Especially around big levels. It's kind of it's all about kind of important to know the levels you want to play through and where you're expecting a reaction. It kind of gives you more conviction as to play through that level when it does.